Hey traders, welcome to Charts and Coffee. Hope everyone's having a great morning. CPI morning at that. We just wrapped up a session in the Sector Secrets Mastery where we did this last Friday too for non-farm, although the last Friday was a little bit more difficult in terms of the entry being pretty good, but the target being one we had to adapt to with the volume and with the volatility. But today's S&P and bond trade, this is an hourly price movement range fade, worked out really nicely. So I know that some of our mastery folks are managing probably the conservative end of the hourly price movement range, still long. And this was just to get an idea. The aggressive edge of the bond trade was 129.08 for those of you that were watching. And the zone for the buy in the S&P was 39.59 to 39.85 with an initial target at 4,004. And then so now we'll see what the pre-market here between now and 9:30 brings, and whether or not we get that 9:30 echo. In other words, we had this event that frankly equity traders can't do anything about. They can't participate. Equity traders, options traders in equities, ETFs. However, futures traders, Forex traders, that's our window. So sometimes we see an echo when there's a brand new group of market participants that are able to express an opinion about that CPI number. This is never about playing the actual number, but rather the overall volatility of the event. And we measure the volatility, of course, with the hourly price movement ranges. Okay, so let's get to it. Let's get to it. I mean, this is the hottest, like I was telling the Sector Secrets Mastery folks, volcanically hot lava hot zone. More important than Powell this week, this is a number that's going to set expectations for rate hikes and cuts. The 4 3/4 to 5% column continues to pull away from the 5 to 5 1/4, meaning we're a little less hawkish than we were maybe just a couple of weeks ago. The question, though, is not when do we stop hiking? That's pretty much set. It's either going to be 4 3/4 to 5% or 5 to 5 1/4. That's been in the normal range of things. Question now becomes, is it November or is it December of this year, gang, that we see the first rate cut? And that's where we sit right now in terms of the hot zone. All right. Let's see. We're not getting audio in the free trading room. Hang on one sec. That's a little strange. Okay. Let me see if I can fix that real quick, and we'll resume in a moment. All right, my free trading room folks, everything should be good now. And I was just mentioning that we have a long position from the CPI based on hourly price movement ranges. And what I was explaining here is it's looking like not only are we going to peak around 4 3/4 to 5% on the target rate probability, but that also November, December of this year looks to be when there's a possibility, not a strong probability, but a possibility for that rate cut. All right. So audio is good on YouTube. Excellent. Yeah, it was just the free trading room that was having some issues. All right. Yeah, we are broadcasting in 3 places, by the way. The Simpler Trading YouTube channel, my YouTube channel, Raghee Horner, and also our free trading room here at Simpler. All right. So let's get to it. Let's get to those questions. And first up is, can we take a look? Hey there, editor. Can we take a look at Home Depot? Sure. Sure. All right, Home Depot moving higher, still in chop. So Home Depot, editor, let me grab my drawing tool here and show you what I'm looking at. All right. Take a look at that Darvis support level right here. 2 Darvis signals. Noting the pattern that I like to look for. Neutral market, oversold stochastic. That's the day. That little X marks the spot, and that specifically is the 6th. That's the buy. Or if you're waiting for a minor low pattern to confirm, the 9th. The 6th of the 9th is the long position. So we're getting follow through from that oversold buy on Home Depot. All right. Okay, next up, Cash Insomnia says flat CPI got to be good for markets. I'll tell you what, Cash, I never know what's good or bad until the market speaks, right? The message of the market's what I try to be the most tuned into. But I agree with you. I think that based on what we see, I would agree that the initial reaction was actually was great that it was a sell-off because that's what got us long in the hourly price movement range green zone. The To your point, now ultimately after the dust settles and traders can not only determine what that peak target rate is going to be, but then also fast forward what they expect the timing on the first rate cuts to be. Once that was sorted out, right, I agree. The ES moving higher, ZB, the bond market moving higher, meaning lower yields, has spoken. I agree that at this point, we're getting follow through. Yep, to the upside, sure. Would I share, hey there, Jack, would I share the chart graph showing money supply versus inflation? Money supply. Oh, Jack, that was a chart. I think this is what you're talking about. That was a chart that it was part of an article. This is a chart from BLS and the Federal Reserve that I think Wall Street Journal put together. So I don't have an active chart of this. This was just an observation and a graphic that I grabbed. And you can actually go to the Fred website, Jack, if you want to do this kind of research, which is great. I love it. You can go to the Fred, FRID, which is the St. Louis Federal Reserve's data, and look up M2 and look up core CPI, and you can decipher that pretty easily. If core CPI is dropping and M2 is dropping, it'll just be an extension of the narrative on this particular graphic. Yeah. Gordon asks, how do I access Raghee on YouTube? You're here now, Gordon. You're here now. Okay. All right. Frank asked, I missed the mastery session. Yeah, keep an eye on the alert section, Frank, because we alerted it yesterday afternoon. And I was actually a couple minutes late. But it worked out fine because with the hourly price movement ranges, it's really simple to what symbols are we looking at? What was the directional bias? Let's put in those limit orders, and that's it. So yeah, if you keep an eye on those alerts out of the room, yeah, it's easier that way. Is trading for your broker to take trades or just to chart? Just to chart, but they work with a number of brokers, right? They're not a brokerage, but they are a platform that can allow you to hook your API from TradeStation and AMP and a number of other brokers to hook up into your account through their platform. That's not something I do a lot of, although I have done that in the past with my Forex account, with my crypto account, and I think Alpaca. So, all right. Next up is RTX. RTX. This is a symbol that we've had on the radar for a bit. I believe this is one we had talked about in the mastery. And I do like overall the structure. And one thing that I got to start calibrating to is the time we have to earnings on a lot of these, because once we get inside of 14 days, yeah, it's got to be just some kind of special setup for me to want to take it, because implied volatility starts to increase and I'm going to end up essentially overpaying for an option, and I need a good bit of follow through to overcome that potential overpayment, if you will. So I do like RTX. However, if earnings are on the 24th, that means my last day to enter was really yesterday. If you're long RTX, perfectly fine. But going forward, I would not look for more entries in the RTX. All right. Okay. Next up is, let's see. Question is obvious. I wait for a price to come to the zone. Going long, am I waiting for buyers, Darvis support, and entry? I'm just waiting for the hourly price movement range, Avi. Yeah, so when we're trading the hot zone for whatever it may be, we're using limit orders to buy and the hourly price movement range, and that's it. That's it. Probably the most important thing we do before we even choose which zone to buy, whether that be the red or the green, what we do is we determine what our preferred entry would be. And based on market structure in the S&P and bonds, S&P and bonds, it was long and long only, long and long only. All right, William says gold and silver are up this morning. Remember, yeah, same there, William. Gold is already in an uptrend, so not surprised at all to see continued follow through. Those of you that have been looking for different zones using daily price movement ranges, and we've been talking more and more about these tools. We're going to talk about them a lot more on the 15th. So if you haven't had a chance to pencil that in, February 15, it's just right around a month away. It'll be here before you know it. We're going to talk a lot more about historical volatility through the lens of a daily price movement range. And that's what we have in play here for the third time in just 6-7 days. Fourth time in just 6-7 days. That daily price movement range continuing to guide gold higher. Not even touching the wave, gang. Not even getting a reversion to the mean, which for me is a 34 EMA wave. Just surfing that daily price movement range. And that's following through the overall trend to the upside. Why? Remember, gang, if real yields are narrowing, inflation's flat, and bond yields are going down, well, that is then going to give us a nice boost to gold as real interest rates are narrowing. That chasm between the nominal yield of a bond and the rate of inflation narrows. That's going to light the way for gold. Even if that real interest rate, real yield flattens out, that's been pretty bullish for bonds, and gold's a big part of that. Yeah. And those are both really good uptrends, William. Yeah, gold and silver. Right, exactly. All right. How do you use the HPMR after it's inverted or squished? You don't. Right? That's by design how the HPMRs say just no, right? Just no. All right. Do I expect a mirror reaction that echo at 9:30? Yes, I would expect more strength at 9:30. Yes, absolutely. Let's see. To like is free. I appreciate that, Cash Insomnia. No, I appreciate that. Smash that like button. Yeah, if it's moving the needle for you. No, I do. All right. Next up is if the dollar continues to move lower. Right. So one of the easiest ways to gauge the dollar, in fact, the best way to gauge the dollar, Joker for me is just watching 6E, is watching the euro, the dollar basket, which is what we all look at. Dollar index futures, dollar basket, UUP, dollar basket, DXY, dollar basket. The heaviest weighted currency in that basket is that euro. And therefore 6E, inverse negative correlation, is the best way I know to look at dollar strength or weakness through what the euro is doing. So if it's up, dollar is down. Yeah. All right. Let's see. Where am I? Oh, great. Don't you love when your spammer is on your channel? Don't you love that? Where am I watching from? Oh, that's hilarious. So my spammers, so this, whatever that is, wow. Some people just wake up and have nothing else better to do, huh? Oh my gosh. Marcel asks, it seems my arrows are pointing in the opposite direction of yours in the chart. How can I fix this? Marcel, I don't do tech supported charts in coffee. However, I think I have a pretty good idea of what that may be. And it's likely that you're using the Darvis 2.0, if I'm guessing correctly, and not the 3.0. So Darvis 2.0, Darvis is a momentum strategy. And the arrows accompanying the Darvis way of using the boxes is a momentum. And you can just turn those off because I don't use them. I don't use Darvis as a momentum strategy at all. However, that is the way Nicholas Darvis intended it to be used. So just turn those signals. I believe they're buy and sell signals. Just turn them off on Darvis 2.0. Just turn them off and you should be right as rain. The arrows I'm using come from Darvis 3.0. So a different premium version of that indicator. All right, next up, you know what? I do want to follow up on this S&P, just if nothing else, to kind of explain what happens next. So if my buy zone were limit orders at 39.85, you can even put one in the midpoint between 39.85 and 39.59. I just put in two limit orders, one at the top end of the HPMR and one at the bottom end of the HPMR. Remember that our platform will typically take all the options or all the futures contracts that we bought at in the same contract and mush them all together and give us an average price. But I know how many contracts I bought. You know how many contracts you bought. So it's really important that as 4004 is hit, we scale out. That's risk management. It might say, Rog, how is paying myself risk management? Because risk management is, how do I protect not only my downside, but by paying myself, right? So if I pay myself, if I scale out and move to a break even, what have I just done? I don't want to let a winner turn into a loser. That's risk management to me. A proper profit taking approach is integral to effective risk management. So once we hit 4004, we're going to move to a break even. That means my 39.59 entry, that's the break even for those number of contracts. My 39.85, that's the break even for those number of contracts. So there's a probability, in the case of really volatile days, that one or two legs of an overall entry could be stopped out at break even after having realized a profit. Keep the number of contracts that you buy at each trigger in mind, because then that's going to allow, say, a trader who's long from 39.59 to take all this back and forth and still be up nicely on that trade and see maybe where we might get a second surge as the bell rings to possibly a T2, right? So there's no harm in having scaled out of 39.85. In fact, at this point, it's pretty much something that we need to keep in mind and we need to do. 4004 was hit at 835, right? And then we had a low. For those of you wondering, okay, Rog, when does that break even click in? The 840 candle. 39.85 break even. So you make from 39.85 to 4004, pay yourself scale out of half. We come back down to 39.85, and then just unrealized profit we give back. That's okay. 39.59 is fine. Leave it alone, right? Leave it alone. It's still looking at 30 points of unrealized profit. And that's the way that I'll manage risk, by managing those number of contracts. I thought we'd dive into a little bit of that here in Charts and Coffee. All right. So yeah, Joker, I'll tell you what, if dollar continues to head lower, my favorite trade on that is to continue to buy dips on the 6E. So I'll first look to your point about dollar index and affecting commodities. I'm with you. I'll continue to focus on that 6E. All right. We got a request from the free trading room for Amazon. Sure. Gang, Amazon is just coming out of a downtrend. I'm not a fan of shorting stocks. I know there's a lot of folks out there for probably the better part of 2022 and persist to talk about it here in 2023. They want to talk about giant downside. I don't see it, right? One's an opinion, and then the other is what we can trade. There's a lot that I like to the long side, and that's what we continue to trade. I mean, just to give you an idea, okay, Rog, where are you long, right? My mastery folks know this. We're long Freeport McMoran. We're long, we just got long Clorox. We're long things like industrials. We're long things like staples. There's a lot to like to the long side. I don't know Amazon would be one that I want to short, to be frank with you, Caught. I don't know that I want to short it. I would prefer, this Caught, what I would tell you is, what I really love is go back. Trish wrote this up this week, I forget. If you head on over to Countdown Trader, countdowntrader.com, and if you've never been there, definitely check it out. All right, countdowntrader.com, and right there, and you'll see that we have an update about the bottom picking season. We're in bottom picking season. We're absolutely in bottom picking season. What that means is, if you're a money manager at this stage of the year, and you're looking for opportunities to the upside that have the best possibility for movement, it's really hard to think that Amazon may not become appealing around these first 6 to 8 weeks of the new year. That's why there is a bottom picking season. And I loathe bottom picking. But there is a time where that could become a reality. Who's going to not look at Amazon hovering over 80 and thinking, I am going to regret not buying Amazon somewhere under $100 12 months from now, right? So that's where I would not be a short seller in this part of the year. If you would have asked me October, November, December, short away. First 2 months of the new year, really difficult. And then as far as Boeing, Brian, I would say that buy the dip. Yeah. So Amazon, I would say look for an oversold opportunity to buy. I would not buy it up here, by the way. Just look for an oversold opportunity to buy. If we can go neutral, right? That's the main thing. We're seeing the first signs that we might be going neutral on Amazon. So if we can complete the transition, one more candle of neutral, we can buy around 82. Oversold 82 buys would be valid. And then Boeing, that's a buy the dip. Yeah, that's a buy the dip. All right, gang. As always, thanks so much for being a part of our Caffeinate and Dominate show. I'll see you tomorrow morning, same time, same station. Futures folks, Mastery folks, I will see you shortly. All right, gang. Be good to each other.